everyone, Les here, Chief Analyst of BG Trading Australia. Today is February 19th, 2025, and we are going to be looking into 5 stocks that we are currently holding together with some of our VIP members, and they are about reporting its first half for FY25 year results tomorrow or within the next few days. How are we going to be playing this, provided that the market reaction many times is unpredictable? I'm going to share exactly how I'm going to be playing in each one of those stocks right now. Let's have a look. Remember to subscribe to this channel, and remember that this is not a financial advice, just as from BG Trading, sharing with you how we apply BGS20 and BG Trading strategies together with our VP members to chase 20 to 40% profit within 1 to 3 months of trading time. We normally look into small and mid-sized caps. Sometimes we do trade large caps, like we are trading at the moment with Fly Center and other few stocks. If you like this video, please share it with someone that would be looking at this particular subject. Also, I wanted to share here our latest trading, our latest winning opportunity, which was Bubs Australia, a stock that we covered here in this channel 3 weeks ago. And we bought together with some of our VP members, up about 30% from our entry price. We bought obviously not only because we thought they could go up, but because the company has been improving its fundamentals year on year, quarter on quarter, and based on that, with a positive macroeconomic outlook, that was a green tick for all our multidimensional trading approach, and then that's what we bought. And then some of our VP members have the chance of locking 30% profit today at their own discretion. Now let's start with the first stock, which is Megaport. Megaport is a stock that we bought recently as well, together with our VP members, and it's almost reaching our BGS20 target, which is $9.95. I don't mind sharing the target now because most of the trade is already there, and some of our VP members have the chance to lock in pretty much 28% profit so far. Our target aims for 35% profit from our entry point, our entry price. But again, it's up to everyone to lock in profits or not. What I normally tend to do is I tend to lock in positions that they already has been reaching or almost reaching the target prior to the report. Megaport will be reporting tomorrow and on 20th. And obviously, the market reaction is completely unpredictable. The stock could go up or could crash. Who knows? Even though they report a positive result. So at this stage, it's like 50-50% chance of a positive or negative outcome right at the same day. However, what we need to do is look into in depth into the report and see whether the outlook for the company is positive still, if they're still improving, even though it's not as high as the expectations of the market, but if they still head into the right direction, and if that's so, then obviously we can either buy more or we could just hold the stock, even though it's a sell-off could happen. And obviously if the stock soar, then it's happy days, it's positive, but at this stage we most likely be closing our positions that are already exceeding 20% profit, which Megaport is one of them. We rather to hold our profit than gamble on short-term share price movement upon the result. Okay, that's Megaport. Now let's move to Kogan, which is stock that going to be the company will be reporting on 24th. So KNG, well, this is a disappointment because it's almost reached our BGS 20 target last time. But I know some of our VP members locked that in. Okay, so we lost half of the profit, but we end up buying more. The stock has fell now, trading at technically discounted price. Is that a buy for me? Well, I would like to see what the full year report result is. But based on the last quarter report, it is definitely a stock that will be at least holding or buying at the current levels, even and then obviously hoping that the report is positive. But a stock that normally has already fallen, it tends to be at the lower end of a market expectation if the company reports in line or a little bit better than the expectation. That's when we have a rally. So I would say there's a great chance of a Kogan to rally upon the report if the report is in line to our expectation or even better. Okay, so I would say green tick for Kogan. Obviously, there's no guarantees in the market. If you're buying, you got to make sure you have a stop loss. And this is a very important point, even though you have a stop loss, let's say buying now at $4.50 and there's a stop loss of $4.30 and the market reaction is negative, sometimes the stock could open $3.80 or something and the stop loss will be triggered, but your sell price will be around $3.80 wherever the market opens. So you just gotta be very careful when you're playing this. This is not a time for risk trade. So you should not be trading if you cannot afford short-term losses. So don't trade the stock if you cannot afford short-term losses. That's my strong suggestion. In any reporting season, doesn't matter which stock you are looking at. If it can be a blue chip, it can fall quite substantially if doesn't report as the market has been expecting. So that's Kogan trading at technically discounted price. Obviously, I'd rather buy stock trading at technically discounted price and hope for them to report positively. I expecting Kogan to report positively anyway. Now, whether the market would like to report is another thing, right? But over the middle term and even short term, I would say. So I think at the current price, it is a very positive opportunity. But I wanted to see confirmation on 24th. Once I have the confirmation, I can reassess the company and then reset all those targets and stop losses and see whether the stock price could be heading to the right direction or could be a breakout of this hypothetical support level right there. So Kogan at the moment, very interesting price. But high risk trade obviously just before the report. Now the next one, sorry, it's not the last one. The next one is Cettire Limited, which I covered yesterday in my video. So the company will be reporting on 26th of February as well. Currently trading technically discounted price. There is some sort of a minor ascendant hypothetical support level there. The RSI also looking positive, but I think the market is really waiting for the upcoming result, whether the company will return into profitability. It has been actually profitable last financial year, but the last few quarters, that's when the profit has been reduced dramatically, and that's because the company has quietly entered into Chinese market with a new beauty platform, as I have highlighted yesterday. And then obviously the market doesn't want investment. It's too much short-term driven, and this is a stock that is highly shorted, obviously by short traders. So just got to be careful with that. But overall, I'm very positive about this stock. I'm currently holding a large position, and I can only hope the company will report in line to what we're expecting, returning to profitability as we are expecting. there's no guarantees. That could trigger a huge sell-off. Who knows? Even if the result is positive, this is highly manipulated stock. However, that's short term. However, over the middle and long term, I'm always positive. I still believe that if the fundamentals are improving year on year, sooner or later the stock will outperform, and the stock will match what the fundamentals are looking like, at least for the foreseeable future. So for me, it is definitely positive. I like it, but also there's no guarantees. This is not a stock suitable for conservative traders, even though it's a high quality company, in my opinion, which it's can be very arguably. I like the business model itself. Now, the next one is EML Payments. So EML Payments is another stock that we really like, currently trading at technically discounted price as well. The chart formation is showing some promising movement right there. The first half of FY25, I'm expecting to be far better than last year, even expecting some growth, profitability growth, around 80 to 100% growth, which could bring back confidence and then trigger a buying activity and bringing the stock back above to $1. So I like this particular stock. It's highly undervalued in comparison to its peers. When I talk about peers, it's other growth stocks. And it's currently trading at technically discounted price. So it's no much of a brainer. Obviously, again, wouldn't be trading before the result if it's susceptible for high risk. You know, you don't want to be betting into a stock that could potentially crashes. The chart formation is very positive and is prone for another spike right there. I'm really expecting this stock to spike, and that could be based on the 26 half-year report if they don't bring any surprises now, unpleasant surprises. Obviously, this is again, it's not a long-term investment or anything like that. We only trade on the short term, so we just think it's highly undervalued at the moment, and whatever is undervalued, we like to have position on, especially and if the fundamental outlook is positive. So that's a green tick for EML Payments. So we're going to be holding EML Payments through the report. Obviously, some of these positions will probably go to the wrong way, and then we're going to reassess the report and then come up with a update analysis for our VP members as well. Now, the last one that we've been looking at today is Zip, which we have recently bought again together with our VP members. Right here at the bottom of this cycle, as we sold a potential reversal opportunity right there. Now, look, because this stock is still trading in downtrend, we're just gonna be careful. We're going to be locking profit fairly soon, to be honest. But because it already fell as a result of the last quarter report, so we believe the fundamentals will be improving. We want to see what net profitability looks like for the full year. But most importantly, the reason we bought is not only because we saw this reversal, but because after a long time, and that is since December 2023, it's the first time that we see Zip trading close to the long-term moving average at technically fair price. That's why we've been avoiding Zip for quite some time, and then we only returned trading Zip recently, as obviously we want to be buying things at technically fair price. Obviously, technically discounted price even better, but with ZIP because it continues to grow and macroeconomic outlook still fairly positive as long as Fed doesn't hike rates, then we are positive about this particular stock, and provided that has gone up already about 12% since we bought, if it falls 20%, we won't be feeling too much, and hopefully that doesn't happen. Hopefully it spikes to the upside. So now whether it's going to go up or down, we have no idea. We're only expecting a positive result, but we have no idea what the market reaction is going to be. We're not here to forecast market reaction. We're here to buy stocks that are currently offering value based on the chart formation, based on fundamentals, and based on the macroeconomic outlook in the sector. Right? So let us know what you think about those 5 stocks, and whether you're holding. Put in the comments, and your thoughts on the upcoming report as well. Thank you for watching. Good luck for us and for everyone, and I'll see you next video. Bye.